I've been doing a lot of loans recently, and people are always asking me what they should be looking out for. They're stressed out. What documents am I going to need? On the other end of the spectrum, they blow it off. They think, it should be fine. I see a lot of stress happening for no reason. I have 5 tips for you guys, and it's just things to avoid when you're getting a mortgage. Check this out. If you follow these, your process is going to be a lot smoother. First thing to not do when you're buying your home is apply for another line of credit. So maybe, you've been working a lot, you're trying to get all your financials in order, and you're thinking like, okay, I gotta buy a house, I gotta buy a car. Big do not. If you're buying a home, basically all you wanna do is apply for one line of credit at a time, because every time you apply for a line of credit, it's gonna show up as a credit inquiry on your credit report. Your credit score is like one of the main factors in determining your interest rate. So if all of a sudden, middle of the process, you have another credit inquiry, you're probably gonna have an unpleasant surprise because it's gonna hurt your credit score. Don't do that. Number 2 on the do not do list is large deposits. But basically it all comes down to the US Patriot Act and preventing money laundering. If you have a large deposit, it might be legit. You might have $50,000 laying around from your, self-employed business, and it's got to get in your bank account somehow. But it will delay your process because you have to source everything. If all of a sudden your bank account that you're using for your down payment has an extra $50,000, well, that could be a red flag for the underwriter maybe thinking you're a drug dealer or that you do terrorism stuff, which nobody likes. So yeah, that's number 2. Don't do that. Number 3, changing or quitting your job that should be the most obvious thing there is. You're qualifying on how much money you make. You gotta repay the loans. That's the obvious one. But with COVID, we all know that stuff happens. And so obviously don't quit your job and try to get a loan. That's number 1. But the other ways I've seen it come into play is furloughed borrowers. This doesn't necessarily take you out of the running, but while you're furloughed, you can't get a loan, unfortunately. Sorry. We got to keep the economy strong. Once you come back from furlough, we can use your first pay stub as long as it's within like 60 days of applying for the loan. The other thing you want to be careful of is if you're a self-employed worker. If you write off nearly all your expenses so that in the eyes of the government, you don't make any money. Keep in mind that we have to document all the money that you make. So if in the eyes of the government, you make no money because you wrote everything off, but in reality you make $200,000 a year, well, you're out of luck. Sorry. Don't do that. That's another one. Okay, so number 4, and full disclosure, there is no order to these. Don't do any of them. This is the order I thought of them in. But number 4 is rate shopping. This isn't necessarily a don't, but keep in mind that trying to squeeze every little last drop out of an interest rate can ruin your experience. The market will always improve slower than it tanks. So if you have a good interest rate and you like how the payment looks, but you're just trying to wait that extra 2 weeks to see if maybe rates improve, I would say like 7 times out of 10 you're going to get burned. I've had a lot of clients, we give them an interest rate and then maybe they kind of shop around and somebody's giving them 0.25% lower. So they say, hey, I'm going to go with these guys. Thanks for your help. And that's a good thing. You are in control. It's your decision as the client. You want to make sure that whatever you're doing is in your best interest. But keep in mind that every time I run an interest rate, I put in your credit score, your monthly debt to income ratio, and sometimes these are estimated as best we can initially to give you a quote because we haven't pulled your credit yet. There's so many factors that go into your interest rate. So if the mortgage company you're speaking with doesn't know anything about you, then your interest rate is probably useless. And I've had so many people, they say they're getting 0.25% or half a point in percentage lower, and they come back to me and they said, you know what, I should have never left because when all my numbers were run, the interest rate was the same anyhow. And so all they got out of it was a delayed process, and that makes nobody happy. The fifth thing, last thing, again, no order, just make sure you always tell your lender about all the finance properties that you have. Sometimes there's a property missing on a credit report or something falls through the cracks. Your file goes to underwriting. A, that's fraud, so they're gonna flag that. B, if it's legit, if you do just have a property that slipped through the cracks, at the very least, it's gonna delay your process, maybe affect the numbers a little bit. Next thing you know, you're not gonna be saving as much money as you could have.
Welcome to my house.